Hey everyone, welcome to another episode of basically how to buy a home and different ways to purchase homes. I have with me Amy Ding, the CEO of Requity Homes in Canada. And Amy's going to talk to us a little bit about ways that you can purchase a home that aren't in the conventional means where we see with banks all the time. It is rent to own. Now, that's a term that can be taken loosely in some aspects. Now, it doesn't mean you can get into a home for free or just jump in and get into home ownership. So there's definitely some, we'll call them hoops that you have to jump through, but they're a lot easier than what it is going through a conventional mortgage. So Amy, thank you for joining me today and welcome.
Thank you for having me here.
I guess let's get started off with Requity to go with. Are you a Canadian company? It's a big question I get asked.
Yeah, we're 100% Canadian, and actually 100% of our employees are also newcomers who absolutely love Canada and have set the foot in the country.
So how and when did Requity get started?
Yeah, so I started Requity Homes in 2020, February, so right at the start of the pandemic. A little bit background about myself. I've spent my entire career in the traditional real estate finance field. I used to work at RBC Capital Markets and RBC Ventures. So during my time at RBC Ventures to help the bank build startups internally that focus on property technology space. I saw a lot of home ownership innovative models in the US and other parts of the world. When I look at Canada, there was none. So I asked myself, there's so many similarities in terms of Canadian mortgage markets, Canadian housing markets relative to its counterparts in the US, why there hasn't been any innovation done in Canada. And every one of us know home ownership is a big problem. So I thought, it's time for me to quit my corporate job and start something on my own. And that is when Requity Homes was born.
And everything has to start from the ground up. Like you said, it's something that's been seen in other parts of the world. In the US, I was at a conference back in October of 2022. I went to a seminar which was rent to own. And it was great because I already knew about Requity and what they were doing because I've been working with your company. But to hear it from another aspect from, we'll say south of the border, things were very similar. The similar problems of home ownership being answered. So with Requity, people need to understand this isn't a free home. It isn't just, snap your fingers, bang, I can be a homeowner and I don't have to put any down payment down. But it is a little bit different where you don't have to do the standard 20% down payment. Am I right?
Correct. Yeah, so maybe I'll give a little bit color just for everyone, all the audience benefit. What Requity Home does is we offer a modernized rent-to-own program, just like how you can lease to own a car, where if you don't qualify for a traditional mortgage at the moment, that's no problem at all. We basically will come in and purchase the home of your choice upfront, so you can move in today, enjoying the home with the family, enjoying the space, and make it your own. And during usually 3-year the term, our standard for the rent-to-own term, we will work together to help you get ready for a mortgage. At that time, we'll sell the home back to you at a predetermined price both parties agreed upon initially. So that's what rent-to-own is about. You're absolutely correct. Our barrier entry for rent-to-own program is much lower than getting a traditional mortgage, because otherwise, people don't need us. If you can get a mortgage, you don't need us. And we're really served as a stepping stone. And generally what we're looking for, very high level, 2 things. Number one, that our clients can't afford the rental monthly payments. Secondly, they can actually qualify for a mortgage at the end of the 3-year term so that there is a eventual buyback. And in order for us to assess those 2 kind of elements, what we usually do is we'll take a holistic approach, looking at applicants' credit score, existing savings, income, and their spending saving habits, and make that decision. And give you some very concrete, specific minimum requirements. We do require applicants, at least one family member, to be fully employed with minimum $50,000 annual income per household. And we do require them to have minimum credit score of about 500. And generally, we require a 2% of the initial home price as a down payment to start the program. And lastly, we won't be able to help anyone if they're currently in an active consumer proposal or bankruptcy, because it does take time to get discharged. And once you're discharged, it does also take time to build up your credit. We don't think 3 years rent-to-own term will be sufficient for those applicants to eventually buy back home. So that's why we can only help you if you're fully discharged.
And is this basically focused more, or do you have to be a first-time home buyer, or can you be, let's use, for example, you already own one home, can you do Requity to do rent to own for another property?
That's a great question. So we don't have a criteria says, you had to be first-time home buyer in order to qualify for Requity Homes. That being said, we do have an explicit requirement where you have to use this home as your principal residence. So in that particular example, if the person is looking for another property to move in themselves because the other property is a different location or is too small, then no problem at all. We can help you rent a home as long as you're going to be living in the home by yourself, rather than rent it out as a investment property, because generally speaking, we want to help people make homeownership more accessible, not more investors invest into real estate.
And that's kind of where I was going with basically the house hacking, right? People are always looking a way to advance themselves. And I have had that question, people saying, well, can I do it to buy a second property? So there's stipulations, but if they have those questions, they should be reaching directly out to you or to Requity themselves, correct?
Of course. Yeah.
Okay. And stipulations. I know there's some stipulations in regards to when someone purchases a home utilizing Requity. They can't be buying a home that is basically falling apart or needs any major repairs.
Yeah, that's correct. So in terms of what kind of homes are eligible for our rental program, at the end of the day, we want to make sure those homes are in a good condition where people will be able to live in there over the next 5 to 10 years, raise their family. So specifically right now, we're focused on freehold properties, i.e. not those condos, apartments with a fixed monthly maintenance fee. Secondly, we focus on our properties that's within the city limits, on municipal water, municipal sewage. We don't do mobile homes, leasehold properties, no rural properties at the moment. And we have to have mandatory home inspection. As you said, we need to make sure the homes are habitable, because when we start the relationship, it's tenant landlord, and legally we're bound to make sure the homes are livable, habitable before we can start a relationship. At the end of the day, I think it's very important for us to know what kind of homes we're buying. If there are any major repair maintenance, obviously it's pretty costly, and we want to mitigate the risk of any unexpected major repairs, maintenance through the process. So we basically want to help our clients like as if they're buying the home on their own as a prudent potential homeowner.
Now, I'm going to ask one thing I just noticed in there. Could someone do Requity Homes for a pre-construction property?
In theory, yes, if that pre-construction property is going to be complete within 6 months time frame. Generally for freehold single-family homes, sometimes you can potentially get it done within 6 months. I know for condos in big cities like Toronto, Vancouver, it might take 2, 3, 4, 5 years. We won't be able to wait for that long. It really comes down to how fast and the builder will be able to deliver the unit.
Okay, great. And that's one of the things I was thinking about in regards to the way property values go. Again, we want to highlight to people that this isn't free money. It's not too good to be true, but there's definitely some stipulations that have to be followed. You mentioned it has to be a freehold. There are some workarounds in regards to, say, if somebody wanted to buy a condo, because they would have to ensure that they could cover the monthly maintenance costs themselves, right?
Yes, that's correct. So everything I share is generally what we prefer. There are always cases where we can try to make exceptions for certain clients. As a matter of fact, we actually bought a townhouse that has a relatively minimum monthly condo fee for a particular client, just because they don't want a house. They don't want to deal with snow remover and all the logistic hassle of maintaining a detached house. So in that case, the client has no problem paying for the monthly condo fee themselves, and it was really a good condo townhouse, great location, relatively new, so we actually made exception for that particular client.
And earlier you highlighted in regards to if someone is doing this and they already own a property, or just in general, like say for investments, as long as it's their primary residence, they're good to do this. If they were to buy, say, a duplex or a triplex, as long as they're living in the one unit, someone could rent out the other 2 units and there'd be no concerns?
Potentially, whenever it comes to duplex, triplexes, or even like a detached house with a basement that has a separate entrance. So what we always do is we had to make sure that generally those homes are a little bit more expensive than a single family home. So what we have to do is when we do our underwriting, we had to make sure, assuming there are vacancy with the other units, the existing client will be able to afford the entire place on their own, because you can't be 100% dependent on the rental income because there always going to be vacancy, or you may actually end up having a tenant who default on the rents for a prolonged period of time. So that's just one thing to consider. It's not like everyone will be able to do it. It's like your income, your cash flow has to be there in order to potentially get something with additional income potential. And secondly, in those circumstances, generally we do require, the rent-to-own client to get our consent whenever they want to find another, subletted part of the room or the other units. We just want to make sure those new tenants will take good care of the home and have the ability to afford the rents.
Okay, excellent. And you'd mentioned 3 years on the terms. Is 3 years the maximum someone can do a rent to own? And what would be the minimum amount of time they could do it?
Yeah, so the minimum rental term is 1 year. That being said, we say 3 years standard rental term. It doesn't mean our clients have to wait until the end of year 3 to buy back the home. In theory, in reality, they can actually buy back home at any time throughout that 3-year period of time. Whenever they qualify for mortgage, they just let us know they get a mortgage, and we will, sell the homes back to them. In terms of the maximum time, generally we think 3 years more than sufficient for our clients to change their behavior, save more money, to establish their Canadian credit history, improve their credit score. And we don't want to offer like 5-year term where people think they have more time. They're less likely to actually change their behavior and get ready for mortgage as soon as they realistically they can. That's why we set a 3-year. The reality is, if it comes to the end of year 3, our clients say, hey, I really just need an extra 6 months to get ready for mortgage. We're not going to say no. We'll just extend the rental term, give them a little bit more time to get ready.
Okay, and that was going to be my next question. So thank you for highlighting it on that point. Now, Requity puts a portion of the rent that you basically collect also towards their future down payment as well?
That's correct. So how that works is that our clients will pay us a fixed monthly payment, and there are two components within it. One is the rent component, and generally that amount is roughly in line with the market rent. If you are going to rent a similar home in the area, you have to pay that amount regardless. So there's no extra fee. And that premium over the market rent, that count as savings. So both the initial deposit plus the monthly cumulative savings will count as the down payment once the clients are ready to buy back the home with a mortgage.
Okay, perfect. And let's just say when it comes time to, well, let's say year 3, they're coming to year 3, they decide they don't want the house anymore. What happens then?
Yeah, so it's completely within their rights, and we set up our program in a way where it's an option for our clients to buy back the home, not obligation. So it's completely within their rights to decide to walk away from the home if they choose to. In that particular case, there's a non-refundable transaction fee, which is 5% of the original home price. The reason behind it is that when we bought the home, it's for them. If they don't want it anymore, we had to sell the home in the open market. We had to pay 5% realtor fee. And keep in mind, we also incur 3% usually closing costs when we buy the home, land transfer taxes, things like that. So we do, there is a non-refundable transaction fee in the event the client decided to walk away. And whatever that cumulative down savings they have that left, we'll refund them back to the clients, and we'll just sell the home in the open market.
Okay, excellent. And that's where people need to understand, where it's not, again, we use the term free money. This isn't a free home. There are contracts that are in place to protect not only the buyer, I'm going to call them the buyers,
Yes.
as well as protecting Requity themselves, because it is a business and you have to run yourself as a business case.
Correct.
Okay. Do you happen to have any numbers basically on, since 2020, how many people Requity or families Requity has helped?
We actually don't disclose that number publicly. And that being said, I can definitely share some other stats. So in 2022 alone, we had thousands of rental applications. And so far, we have over 5,000 customers reaching out to us over the last 3 years wanting to rent a home with us.
Perfect. And I'm going to throw something else here towards you. And I get this asked from sellers. So, as a real estate agent, I speak with sellers and we talk about different ways to market their home, to sell it conventionally. But I also, if I see a potential for a home that could definitely be something a Requity would be interested in, I always tell the seller, hey, can we market it this way? Show the seller a different way on how we can market their home in addition to the standard MLS listing. Are there any risks to the seller if they were to sell their home to Requity Homes as opposed to selling it to John Q. Public?
There's no risk or any additional risk than selling to us versus selling to someone else, because I understand traditionally sellers don't want to do rent zone with a client directly because generally they kind of need the cash. That's why they want to sell right away to get that money. And if you do a rent zone, you actually don't get majority of your sale proceeds until 2-3 years down the line when the tenants actually buy back the home from you. So that's why rent zone hasn't been a mainstream for Canadians to access home ownership. And how it's different with Requity Homes is sellers don't need to do rent zone with the tenant buyers. We actually come in, buy the home from the seller directly. So the day we buy the home, the closing day, the seller get their proceeds, they move on with their life, and then we get into rent zone with the tenant buyer on the side. So the risk of selling to us versus any other typical home buyer, it's no difference, and there's no additional risks by working with us. If anything, it's actually better for sellers because now they can actually potentially have a broader audience. People historically cannot buy the home on their own can potentially, view that home and become a customer because Requity Home is stepping in buying the home.
Perfect. And for buyers themselves, what would you say is the buyer's advantage to using Requity Homes?
Yeah, so there are a couple of advantages. Number one, you don't have to wait for many years hoping that you will qualify for a mortgage. You get to move into your dream home right away, start enjoying the space, make it your own. Secondly, we do set the future buyback price today at, today it's usually based on a fixed increase per year. So if the market goes up higher than that, what that means to the rental clients is they can potentially buy back the home at below future market value, i.e. they can benefit from a rising home market. And lastly, we also offer a lot of kind of home ownership coaching services throughout that 3-year term to help them get ready for a mortgage. And so those are the kind of the 3 main advantages by working with us directly rather than trying to save on their own, hoping they will qualify for a mortgage in 3 years time frame.
Now, Amy, you've started this company from the ground up. You've been in the trenches. It's now growing. You're a couple of years into it now. Where do you see Requity Homes in the next 2 to 5 years?
Yeah, so we have very big ambition. We always say, hey, can we help 10,000 families become homeowners in the next 5 years? One analogy I always use, and sometimes I feel like I use too often, is like lease to own a car. And nowadays, all of us, we can go to any car dealerships, you can buy a car in cash, you can finance it with a vehicle loan, or you can lease it on a fixed monthly payment and decide whether you want to own this car at the end of the term or not. And if we think about it, why can't we create a future where anyone, anywhere in Canada, you can actually rent a home as easily as mainstream, knowing that Requity Home right now only focuses on certain geography, but we definitely want to offer this product on a national basis, coast to coast eventually.
Excellent. Well, thank you so much for joining me today and explaining to everybody how Requity works. As a real estate agent, I've been trying to explain it to them, and for people to basically hear it directly from the source, it's going to go definitely a long way. I look forward to chatting with you again here in the near future and just seeing how big Requity has become.
Thank you so much, Dave, and really appreciate you having me here.